Hi, this is Peter again with Wahing Realty. Thank you for watching our newsletter. Today, last time we talked about 1031 exchange, and I told you I kind of did it backwards because somebody needed to do 1031 exchange and asked me to do a video. And I assume you guys already know all the tax benefits and all the write-off regarding to your rental properties. In the next 1, 2, 3, 4, I don't know how many episodes, depend on how many topics you guys want me to cover. I'm going to talk about rental properties, and today we're going to talk about some simple math. We got into NOI and cap rates, and I'm going to tell you a little bit about what it is. And in the next one, probably I'm going to talk about like tax advantages and what can be deducted, what cannot be deducted as a rental property owner. And 2018, there's something new in the tax code as well. I'll try to cover that next time, so stay tuned. So let's talk about rental properties and how much it costs to own one, right? So in a hypothetical example, let's pretend we're buying a property, a condo for $400,000, okay? And it has a rent of $2,500 in rent. And let's talk about NOI first. NOI is net operating income. Basically, it's all the income, right, minus all the expenses except for debt servicing. So mortgage doesn't count, everything else count, and we want to know how much money we gonna net after subtracting all the different expenses. So what are some of the expenses? So first thing comes to mind, debt and taxes. We got property tax, right? And of course there are some fixed costs and some variable costs. That's whether you like it or not, you have to pay, right? Property management, you have to pay no matter what, right? If there's no tenant, that's another story. But if there's tenant, you have to pay it, right? And HOA fee, let's pretend it is $350 a month. That's kind of average on the East Bay. What are some of the other fixed costs? Insurance, okay. And let's talk about variable costs. Okay, we have utilities, right? If you rent a single family, sometimes the garbage, the landlord covers. Sometimes the water, the landlord covers. They never cover the electricity. Well, I never seen one cover the electricity. And let's say fix up costs, right? And like vacancy, right? You don't know how long a tenant's gonna live there, right? Even if you bound them with a 1-year lease, if they leave 6 months out, then you have to take account of the vacancy factor. So let's make it simple. Let's just do this much. So to make the math simple, we just do 1.2% in property tax. That equals to 0.1% a month, equals to $400 a month. Okay, that's pretty simple. And Bay Area property manager probably 8%, right? And insurance, let's just say $50, right? Utility, Citizen has HOA, and HOA sometimes include the garbage and water. Let's do 0 for now, and let's do like 5% vacancy, 5% fixed up costs. Then that's 10%, right? Okay, so far. So if you add everything together, 400 plus 350 plus 50, that's 800, right? This item, and this item. And then this item plus this item is 18% of 2,500. And if you do the math, equals to, I did the math earlier, so that's $1,250 a month. That becomes your annual. If you multiply it by 12, because they usually deal with NOI by annual basis. So in this hypothetical example, you get $15,000 a year of net operating income. So from that, well, everybody want to know what their return on investment is. So in real estate term, it's kind of called a cap rate, CAP. Okay, equals to NOI over OI minus purchase price, right? So equals to 15,000 over 400,000 equals to 3.75%. So this is like one of the most important numbers in real estate. If you're buying it for investment purposes, the higher this one is, that means either the income is going to be higher or the purchase price is going to be lower. So theoretically, the higher this number is, the better the return is. But this one doesn't take into account of appreciations, which most of the Bay Area investor are looking at that number a lot more than this number. But if you are looking for property to generate passive cash flow, this one is very important. And in the next episode, we're going to talk about what about that servicing. How do we deal? How does the getting a mortgage from the bank play a role in these calculations? What's the return on investment in different scenario? How do you make it better? And how does the 2018 new tax code changes that affect the number? And later on, we're probably going to talk about when you sell it, how much tax you need to pay, depreciation recapture, and that type of things. So stay tuned. But before you understand the other videos, you have to understand what an NOI is, the net operating income, and what a cap rate is. So remember those before our next sessions. Alright, thank you very much.